Hey, this is Matt from InvestiQuant. Today is Monday, February 8th, 2021. This morning we saw the markets open up the week higher. We have since kind of consolidated the majority of the day. You can see the S&P in this top left chart. We tested higher initially and then broke lower. We have since retraced back a little bit more towards the middle of the range, but we're still trading below the open. We're trading in the bottom portion of the range, but still above Friday's close. So what I want to do this afternoon is look at this price action like we're seeing here this afternoon. So let me set this up in all four instruments. I'll describe the price action in just a second, but first I need to select intraday time-based entry of 3 p.m., set it up as a long, so that'll be getting long at 3 p.m., exiting at the close, which is 4:15 p.m. Eastern Time. Now, to describe the price action that we have developing, this morning we opened up above yesterday's high, which was above the high of last week as well. So that's not normally an opening location that I use, but I figured I'd use it today. So I'm going to select that the open was above the prior week high, and the easiest place to grab that is just going to be here from the active today section. So I'm going to come here to open above prior week high. That by definition is going to be a gap up. So that's the only opening filter I'm going to use. Now, when using this opening filter, I also want to look at today's day being Monday. So we're getting a gap up above last week's high on a Monday. So next I'm going to go ahead and add that to the filters that are selected. So I've got day of week. I'm going to hit Monday here. So the open of Monday was above last week's high. We're starting a new week on a high note here. I'm next going to go ahead and add the market environment that we're in. I'm going to say we are above a 10 and above a 200-day simple moving average. And then lastly, I'm going to go into the post-open filters. And this is where I'm going to describe a little bit of the price action that we have seen so far today. And that price action that I'm going to describe it as is we are trading below the opening print for the day, but we're still above Friday's close. So to add that, I'm going to go into the intraday close versus intraday range, and I'm going to say that the close as of 3 p.m. is below the opening print. So I can hit equals for close less than open. That means the 3 p.m. price is below the 9:30 a.m. Eastern Time price. Of course, it's not 3 p.m. right now, so I don't know for sure that that's going to be true, but as of right now, that is true. So this is saying there is a red candlestick developing. Next, I'm going to say that we are still trading above Friday's close. So we've got a red candlestick that's still trading higher than the prior day close. So to do that, I need to go into the intraday close versus daily levels and say that the intraday close is above the prior session close. So I just hit equals next to above prior close, and that will describe the price action that I'm looking for here. Now I can click view results. And here we go. These are the results of going long at 3 p.m. Eastern Time when on a Monday you are opening above last week's high, and as of 3 p.m. you are trading above the prior session close but below the intraday open. This is taking place in a bullish environment described as being above a 10 and 200-day simple moving average. Historically, we've got 28 samples for the S&P, 18 for the NASDAQ, 26 for the Dow, and 18 for the Russell. If we look at how many of these have finished higher than that 3 p.m. price, we can take a look at the win percent here. And it says that the S&P, only 36% of those 28 samples have closed above the 3 p.m. price when that price action was developing. For the NASDAQ, it's 44%. For the Dow, 46%, and for the Russell, 33%. So all four of these are below 50%, and you've got the Russell and the S&P being the weakest there in the mid-30s. The Dow is the strongest, and it's just slightly under 50%. So as a group, they are a little bit weak here, with some weaker than others. If we look at the average win to average loss, fairly similar in size for the S&P. The NASDAQ looks like it's had a little bit larger average loss. For the Dow, it has had a larger average loss. And for the Russell, it has had a larger average loss. So all four of those have had larger average losses compared to their average winning amounts when this pattern has been in play. And they have leaned a little bit more on the weak side when you look at the win rates as well. So hopefully you found that helpful. Good luck today, and we will see you next time.